This is the Rational Reminder Podcast, a weekly reality check on sensible investing and financial decision-making for Canadians. We are hosted by me, Benjamin Felix, and Cameron Passmore.
I think this is the kickoff show to the new year.
Yeah, I guess it is, isn't it? So we had a great guest for this episode. It was Robin Powell, and he's been a major global advocate of evidence-based investing for years. I don't know how many years, but a while.
Well, I've been following him for at least a decade online with the number of documentary videos that he has online. And we've chatted back and forth online. And
his business is he does have a vested interest in evidence-based investing. He creates content, specifically video content, for evidence-based financial firms to promote the investment philosophy.
What's cool is that he's a journalist. So he's worked for ITV, Sky News, the BBC. And I thought it was interesting how he described the role of journalism is to present the evidence as to what makes sense and not just become mouthpieces for the industry. So he really does call out the industry, I think, in a positive way to try to make a change.
Yeah, but he generally produces fantastic, real British, BBC type documentary content. But he's a good guest, lots of good stuff to say.
So we reached out to him from Birmingham, England, and have a listen.
Yep, good episode.
Robin, welcome to the podcast.
Thank you very much for having me.
So, Robin, I don't know how many of our listeners will know who you are. Can you briefly describe yourself and what you do?
Right. Okay. Well, I'm a journalist. I was a television reporter for many years, especially distinguished in any particular field as a jack of all trades TV reporter on network and regional TV news and current affairs here in the UK. Worked for ITV, BBC and Sky News. And yeah, you sort of get to an age where in television, which is a very ageist profession, they kind of sort of push you to one side and say, isn't it about time you were moving on now? So I set up my own company and we produce broadcast quality content for organizations of all kinds, but we specialize in content for financial advice firms.
Robin, you and I have been following each other for years. I know, sharing kind of tweets back and forth and stories back and forth. And I'm really curious as to what event caused you to become so interested in being part of spreading this evidence-based message.
Okay, I can be very precise about that, Cameron. I've always been pretty interested in investing. I thought I knew far more about it than I actually did. And basically 6 years ago, we were approached by a wealth management company here in Birmingham, England, where I'm speaking from. And they had I would now call an evidence-based investment approach. And they basically wanted to educate ordinary investors about this way of investing. Like a lot of financial planning firms, they deal mainly with high net worth individuals. But as you and I know, this is a way of investing that can benefit everybody. We all invest. And so we made a documentary called Passive Investing: The Evidence, for which I interviewed Jack Bogle, Charlie Ellis, who again, you guys will know, Nobel Prize winners like Eugene Farmer and William Sharp. And I'll be honest with you guys, I was shocked. I was honestly shocked that there's so much information out there about how people should be investing. And yet not only do most people do pretty much the opposite, we're actually encouraged by the industry. People who are supposed to be pointing us in the right direction, we're actually being encouraged to do things precisely the wrong way. And yeah, it shocked me.
Can you talk a little bit more about the impact that speaking with people like that, the type of people that you were just mentioning, what kind of impact did that have on you personally?
Well, I could separate the kind of evidence, if you like, from the people who were telling me the evidence. I mean, the evidence is just completely compelling. And a lot of the people who started writing this stuff are no longer with us. I mean, thinking the likes of Paul Samuelson, for example. I interviewed Harry Markowitz a couple of years ago. He's in his early, I think he's 91 or 92 now. This stuff has been around for a long time. So I found the evidence compelling, but some of the characters involved in kind of trying to change investing for the better, I just found them just so inspiring. I mentioned Charlie Ellis there. He was the guy who wrote this paper in, I think, 1975, winning the loser's game, which really, I suppose, kicked everything off in terms of making people realize that the active fund industry isn't serving consumers very well. He's a great guy. And then, of course, Jack Bogle, living legend, founder of the first retail index fund, Vanguard Asset Management. Again, such an inspirational guy. And people said to me, well, how did you get all these Nobel Prize winners to speak to you? But to be honest, if you spend decades and decades writing about something that is largely being ignored, my experience is people are actually quite grateful to have somebody come along and ask them about it.
So now you've got this film, and we don't have a version in Canada yet, but we'll talk about that in a minute. But where you have released the film, can you talk about the impact that it's having?
Okay, well, in fact, there are now several films. That was the first film, Passive Investing: The Evidence, and we produced that for an organization called Sensible Investing TV, which was effectively run by the wealth management company in the UK I told you about, who commissioned that first film. And I looked the other day and I noticed we're rapidly approaching 1 million views worldwide. Not just for that documentary, but related material, basically. So, I'm pretty pleased with the impact that has had. We have since done a follow-up film called How to Win the Loser's Game, again for Sensible Investing TV. We've made a film specifically for the US market called Index Funds, the 12-Step Recovery Program for Active Investors. A bit of a mouthful, that one. We've also produced one, our most recent, Investing the Evidence, which was originally commissioned by a firm here in the UK called Rock Wealth. We have just released an American version, and we are, funny you should mention that, we are actually now working on a Canadian version as well.
Can you tell us more about that, Robin? What are your plans for the Canadian market?
Yeah, well, to be honest, the whole of the world really is ripe for the evidence-based investment approach. But there are one or two countries in particular which, in my view, are really crying out for it. And one actually is Australia. I don't know if you are familiar with what's going on down there, but there's been a Royal Commission and it's due to report next year, I believe. And the interim report is absolutely damning about the conflicts of interests in the banking, financial services and financial advice industries. And so I really think there's potential for evidence-based investing there. And secondly, Canada. I mean, what is it with you guys and big banks? You like your banks in Canada. And certainly here in the UK, banks had an image of being, thoroughly kind of safe and professional and trustworthy, and they've badly let us down as well. And I think that, I'm sure from what I've read that something very similar has happened in Canada, and yet it's the big banks, the big financial institutions, which are completely dominating the investing industry. Your fund fees are among the highest in the Western world, and yet you've got people just over the border in the United States who are paying the lowest fees in the world. So, yeah, what I say to Canadian investors is, wake up. You're largely, sadly, you're being ripped off.
Yeah, we know that to be true. And I think you just pointed out a lot of the important differences in Canada. I think in a lot of ways, we're very similar to Australia in terms of the things that you mentioned.
I think so.
One of the things that we wanted to ask you about is in the UK, I think it was in 2012, they changed the disclosure, proficiency, and compensation rules for financial advisors. And from what we've heard, obviously we're not there, but from what we've heard, this has had a big impact on the industry there, including reducing the number of advisors. And this is really interesting for us because as of right now, we have some proposals from the regulatory bodies to do very similar modifications to our rules. So what we want to ask you is, can you tell us what the impact of the rule changes were in the UK market? And should we be scared, like the lobby groups make us think we should be scared?
Well, it has and it hasn't had a big impact over here. What you're referring to, Benjamin, is called the Retail Distribution Review. And basically, this tried to align the interests of particularly financial advisors with investors. Now, you would like to think, wouldn't you, that the interests of advisors and their clients would be aligned. You go to a doctor and you expect them to give you good advice, and any treatment that they or prescription they recommend is in your interests, if you like. But alas, for various reasons, that has not been the case in the financial advice industry worldwide. So what RDR did was it effectively banned commissions paid by product providers to financial advisors for selling their products. I mean, we call them commissions. We might as well call them bribes, to be quite honest. And sad though it seems, this was the way that the whole industry supported itself. I mean, that was the business model for advisors. They were paid commissions, and they sold the products that paid the biggest commissions. And, they were, you could argue you could definitely argue were financially incentivized to what's called churn those investments quite regularly. So in other words, they would go to the client and give the impression that they were actually doing some good by moving them out of one fund and putting them into another, where in fact probably, they may well have actually been better off just keeping them in the same fund in the first place. So yes, it's been good. RDR has been good in that it has removed commissions. And as you say, Canada is now, considering following suit, and several other countries worldwide. The thing that depresses me about the Retail Distribution Review, you would have thought, wouldn't you, that if advisors have no financial incentive to sell, for example, a high fee investment over a low fee investment, that they would shun the high fee investment and they would go for the low fee alternative. But unfortunately, what we've found is the kind of relationships between advisors and those big product providers are so close, and they go back such a long way. The advisors are pretty much recommending the same old expensive and fairly rubbishy products, which is a great shame.
That's really interesting. The thing that the lobby groups keep saying in Canada, they just had a symposium recently where they reinforced their position. They keep telling investors that if we get rid of embedded commissions, that it's going to reduce access to financial advice. Can you talk about, has that happened in the UK?
Okay. I can sort of see that argument, because if you think about it, commissions was a nice sort of quiet way of taking money away from the client without them particularly noticing very much. Let's face it, the markets on the whole, deliver a pretty healthy return over time. And actually, it's very tempting and actually quite easy for unscrupulous financial professionals to actually take part of that return, if you like, for itself, and quietly, take it from out of your account and put it into theirs. So what is now happening is that investors are realizing, crikey, I'm being given a bill here for £1,500 for some financial advice. I wasn't sent that bill in the past. And of course, no, you weren't sent that bill in the past, but you were probably paying at least that much, in fact, probably far more, by way of ongoing commissions. So effectively what's happening now is the industry is being forced to be honest with investors about how they're paying and how much they're paying for advice and for asset management.
Right. So when the lobby groups say that it's going to reduce access to advice, what they really mean is that people who are getting screwed are going to stop paying for the advice that they were getting that wasn't very good anyway.
Exactly right. Yeah, this is why it's really so important for reputable advice firms like PWL, for example, to really educate investors about the value of good financial advice. Financial advice in the past, the impression given is that it's been all about recommending funds or moving you out of one investment and putting you into another. But really good financial advice has nothing to do with that. Financial advice does offer, substantial value over time, and it is worth paying for. And yeah, we've got a really important educational job to do.
And a lot of that education is communication, correct? I mean, you're a communicator at heart. That's what your training is. And something about this movement has gotten you to be quite active in this. And part of the reason for doing this podcast, Ben and I realized we have to get this message out to more people. But it's very hard to change people's minds on, for example, active versus passive. Has that been your experience?
The evidence-based investor until now has really just been a labor of love. The challenge is actually how to, for a communicator like me, is actually how to make a business out of telling people the truth. You know, as Jason Zweig on the Wall Street Journal has famously said on a few occasions, the way to make money is to lie to people who sort of want to be lied to, if you like. I think the journalism profession has, and I'd say my fellow journalists, I'm proud to be a journalist, but to be honest, I'm not proud of certain sections of the financial media who in many ways have actually been part of this deception, if you like, and have not helped investors over the years. For example, I'm sure you have exactly the same in Canada, but here every weekend the British press is full of kind of financial pages, you know, recommending specific products and specific strategies, you know, and in a couple of months' time, they'll have forgotten all about those and they'll have moved on to something completely different. And another problem with the media, of course, is that it's always focusing on the short term. And as we know, that's one of the major kind of problems investors face, that they really need to think about investing over a very long term and really just to try to blot out this short-term noise. So in a sense, I suppose I'm trying to do what I would like, you know, journalists for mainstream organizations to be doing and really, you know, telling investors the truth about what's best for them.
Do you think the media will ever change?
At the end of the day, journalists need stories. And the problem is, I remember having a conversation with Ken French about this. Now, you and I, who Ken French was, but he's an academic at Dartmouth College in the US. He's done a lot of work with the Nobel Prize-winning economist Gene Farmer. And I said to him, you know, why do you think the media is so against low-cost index funds? You know, why is it kind of so supportive of the active fund industry? And he says, Robin, the problem is that these magazines, you know, they don't want me on the front cover every month telling them that, you know, successful investing is essentially quite boring. You know, it's about saving pretty well as much as you can, as early as you can, keeping your costs low, diversifying, and frankly, not doing very much else. You know, it's a bit like a slimming magazine having to sell copies just by telling people they need to exercise more and eat less. It doesn't go down very well with the advertisers, unfortunately.
I love that story about Ken French. Do you have any other favorite stories from all these conversations that you've had over the years?
Yeah, there's some real characters out there. As I say, something that I have really noticed is that academics who've, you know, devoted their whole careers to this subject are actually very happy when somebody comes all the way from England to come and interview them. I remember, for example, going to see Professor William Sharp in Carmel, California, beautiful town on the west coast of the United States, and he is just the guy who, you know, the media ought to be going to for advice and quotes and so on all the time. But he is a, you know, Nobel Prize winning economist. And yet, you know, he was just completely bowled over by the fact that I'd, you know, taken the trouble to go and see him. Same with Harry Markowitz, meeting him in San Diego in his local bagel shop where he insisted on meeting me, you know, and it was a huge honor for me to meet these massively distinguished individuals. But you know, my experience was they were just glad that somebody was actually giving them a voice. Right.
Meanwhile, Jim Cramer's got a voice on TV every day.
Exactly right. And I see has he just sold part of his business or something and made quite a lot of money out of it. You know, it's exactly as Jason Zweig says. The way to make money is to tell untruths or to mislead people who want to be misled. And yeah, it's just a, you know, sad fact of life.
So I'm going to ask you to put on your predictive hat here, Robin. And if everything you're working on has the impact that you want it to have. What do you think the financial services industry looks like in the future?
Well, whether I will be here or pushing up the daisies, Cameron, when it happens, I'm not sure. But eventually, I can see investors being much better educated than they are now. I think the really exciting development is the kind of growing middle classes around the world, particularly in the likes of India, where I understand, read a statistic the other day, there's going to be another $420 billion US dollars invested in the markets in India alone over the next 10 years. You've got a rising middle class in China. And these people, they're going to be working hard. The young, aspiring professionals are going to be working hard for their money, and they're going to want to know the best way to invest it. And that's the other thing that's different about the younger generation to, if I say our generation or older, maybe not your generation, Benjamin, but basically it's all out there. It's on the internet. And if you do a Google search about, am I better off using an index fund or an active fund, you are going to find the information eventually. Okay, you might find lots of sites who try to mislead you, but the information is out there. And that's the really exciting thing.
For sure, the information's out there. And one of the other things that's happened in the last, I guess, sort of 10 years is the advent of robo-advisors. We've talked a little bit about human financial advisors and the value that they add. Can you talk a little bit on your thoughts about how do the human financial advisors fit in going forward as things like robo-advisor services grow?
Well, especially in Canada, of course, you've got Wealthsimple, who I believe are a Canadian firm, Nest Wealth, Just Wealth. I mean, in a sense, Canada is the kind of epicenter of global robo-advice. A couple of obviously successful ones in America. Betterment is particularly impressive, and so on. And these are all really good solutions. And frankly, for many people, even go as far as to say most people, these are really good solutions. However, having said that, investing is just one of the things that you need to think about when you're planning your financial life. And there are certain things, there are certain people skills that you will never get from a robo-advisor, that you can only really get from a real life face-to-face financial. And I do think that however big this robo-advice thing becomes, there will always be a place for good financial planning firms.
So clearly, Robin, you're on a mission. You're on a big mission here. And a question we've asked a number of our guests recently is, and I want to ask you, on this mission, how do you define success?
Right. Einstein once said, don't aim to be a success, aim to be of use to people. And personally, I will consider, my work and my career, my blog and so on as having been a success if I can help people, I can point people in the right direction. That effectively means that they keep more of their investment returns for themselves, instead of funding other people's retirement, that they'll actually start funding their own. That for me will be success. As I alluded to earlier, I think it's actually going to take quite a bit longer than a lot of us are hoping. But I think we're probably in the next sort of 20 years or so going to be moving to something like, well, at least 50-50 active passive investing around the world. Hopefully fees, particularly active fund fees, will come down much further. And hopefully the advice profession will improve as advisors really do start to learn how they can help their clients, how they really add value.
That's a great point. That might be the biggest change of all. Getting investors to change their minds is one thing, but getting financial advisors to shift from a sales focus to actually figuring out how they can add value, that's a big change. And that may even have to come from regulation. I'm not sure.
Indeed. I mean, because we're all businesses, aren't we? We all have staff, we all have overheads, we've all got to try to make a profit. But Actually, there was a survey in the United States recently of millennial investors, and they were asked, what they want from an advisor. And one of the things that came out very strongly was they do want advisors to educate them, to fill in the gaps in their knowledge. We have this impression of millennials as being sort of know-it-all and, quite happy to manage on their own, and they don't want the advice of the older generation and everything else. But actually, that's not what this survey was saying the opposite. They want help. And frankly, and I'm not just saying this to be polite, but it's companies like, it's financial advice firms like PWL who invest properly in high quality educational content that I think are really going to be in demand over the next 20, 30 years.
That's interesting. We've had similar feedback from the clients and non-clients that listen to our content. So Robin, we're getting to the end of the time limit that we like to keep these episodes to. Is there any final thoughts that you have?
Well, first, I would just like to congratulate you on the excellent content that you're putting out, and I enjoy your podcast. I enjoy your videos and Nancy Graham's videos as well, and your blogs. This is all really good content that is having a really positive impact. I'm also really encouraged by all these other writers in Canada now, like Rob Carrick, for example, at the Globe and Mail, Larry Bates, Dale Roberts, John Chevreau, all these sorts of people who are really contributing to investor education. I actually had the privilege the other day of speaking to a lady called Stephanie Griffiths, who used to work on Bay Street as an active fund manager. And she just came to the realization that actually, although in fact her own fund was fairly successful, she couldn't tell whether it was frankly simply just luck or skill that had produced that modest outperformance over the years. And she's now written a book called Sit Still and Prosper, which has just come out, which basically encourages people to invest in pretty much the PWL way, if you like, keep their costs down, diversify, and sit still, do nothing, prosper. And I'm just really encouraged by the noises coming out of Canada at the moment. And let's just hope that in the coming years, Canadian investors will be better served than they have been by the big banks over the last sort of 30 years or so.
That's great, Robin. Well, thanks again for coming on. We really appreciate it.
And you are having an impact on Canada, and we've been following each other for years. And thanks for all that you do, Robin.
That's very kind of you guys. Thank you very much for having me on.